It's about that time of day again. My name is Joseph. Tuesday evening, October 24th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, Nasdaq, gold, and euro this evening. Crude is bullish with a spike in range pattern ahead of tomorrow's inventory report, which tells me to look for buying opportunities below the range, preferably down to the battle zone. The S&P is bearish with a flag pattern, very good looking flag pattern in the S&P tonight, which tells me to look for selling opportunities using buyer failures below the channel low tomorrow morning. And speaking of tomorrow morning, the Nasdaq is also bearish and trying to retest its measured move from yesterday, but a hidden channel support is telling us to wait for confirmation before selling any more tomorrow. Speaking of tomorrow, gold is range bound heading into Wednesday's session. We're smack in the middle of a triangle pattern on gold, which tells me to focus on failures up at the highs and down at the lows using the 2-try rule tomorrow. And of course, the euro is bearish with a big old flag pattern tonight, telling me to look for selling opportunities using traps below the low of the channel tomorrow. But we've got a great newsletter in store for you guys and gals tonight. We got 2 great examples of flag patterns, which are also great examples of how to know whether a market is pulling back or if it's reversing. How do we know if it's a pullback or reversal? We're going to cover that in tonight's newsletter. Before we jump in, though, and put the plan together for the charts for tomorrow, I do want to remind you the only place to watch the full-length version of this video is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of that YouTube video. Follow that link, come here to the blog at Sideways Markets, and watch the full-length version of our nightly newsletter. While you're here, don't forget, join the mailing list. Upper left-hand corner, give me your name and your email address, and I'll shoot you an email every evening when our newsletter goes live. Lower left-hand corner, follow me on social, StockTwits, Twitter, Facebook, LinkedIn. I just sent out all of the support and resistance levels for tomorrow's inventory report. If you're a crude oil trader, make sure you follow me on social media. I'm always posting important charts, links, and updates throughout the week. And speaking of charts, how easy is this? You can download all the charts from tonight's video and have them ready on your computer for tomorrow morning, right where it says click here to download today's charts. Make sure you grab those charts in the lower left-hand corner. And for tomorrow, don't forget, grab that free pass. Don't delay. You're going to learn more with me in a few hours on that free pass than you will anywhere else on the interwebs. If you haven't done so yet, if you're not a member here at School of Trade, do not waste any more time. You're going to learn a ton with me on that free pass. I'll see you guys tomorrow as a guest in my trade room. And if you have any questions about the free pass, any questions about anything we talk about here tonight, don't forget you can always hit me up on live support. I'm always standing by to help you guys out 24/7. Post those questions on live support. I'll be right there to answer them all for you guys. Lickety split. All right, let's break this thing open here tonight. We got a big day setting up for tomorrow. Tomorrow, of course, is Hump Day, Wednesday, October the 25th. We're squeezing out the last few drops of this month of October. Boy, it's been a great month in our trade room. First things first, we do have a little bit of news here in the overnight session. Not expecting much there. Probably not going to get too much of a reaction there tonight at 8:30 p.m. Eastern Time. We then go into tomorrow's session, and you can see there's quite a bit of news on the calendar here for tomorrow. We got 4 o'clock and 4:30 in the London session. We got the IFO survey and the GDP tomorrow morning, 4 a.m. and 4:30 Eastern Time if you're trading the overnight London session. If you're with me tomorrow morning, we open up our trade room at 8 o'clock Eastern Time. We get the durable goods orders at 8:30 a.m. We got new home sales at 10 a.m. And, of course, we can't forget about the weekly inventory report. So first of all, talking about those durable goods orders, always expected to be a market moving event. I love this because this should move the needle for us early tomorrow morning. Again, I'll be in my trade room with all of our advanced members at 8 o'clock Eastern Time. If you're there with me, we'll batten down the hatch for the news and trade the reaction together. Then, of course, we jump down to the 10 o'clock shock. The new home sales number paired up with that 10 o'clock top of the hour is definitely expected to be a market-moving event. We're looking for probably the biggest movement on markets like gold, euro, and the Eminis right around that 10 o'clock Eastern Time. Remember, because of that new home sales number tomorrow morning. And then don't forget about the inventory report. I know. You would think this is the best part of our day tomorrow, but you know what I always tell you guys? News is noise. It's very difficult to find predictable, reliable, dependable trades around big economic news. And remember, one of the things I love about the crude oil market is the fact that it's not really affected by most news events. But this is something that will dramatically affect all of you oil traders tomorrow morning. Here are 2 things you want to remember. First of all, I just posted all of these support and resistance levels I'm going to be using for tomorrow's session. On Tuesday afternoons, we get the API report. That API report, I use Tuesday afternoon's API report to project my levels into Wednesday's session. Where do you find those levels? Well, I just sent them out to all my social media followers. So if you follow me on social, right, you found those there. And I'll also have them on the blog tonight. So if you scroll below the video, just scroll below the video on sidewaysmarkets.com. There's a link that says click here to read more, and you can find all of the data there for all of these support and resistance levels for Wednesday's session. They're best used on Wednesday, but they will work for the rest of the week. It all depends on how many tests we get tomorrow. So look for those support and resistance levels. They're posted below this video on my blog at Sideways Markets, or you can also see them to be on the chart here in just a few moments as well. Second thing I want to remind you, early in, early out tomorrow morning. If you're an oil trader, you want to get at those trades, and really your best bet is to get them before 10 a.m. Eastern time. This is the tough part about Wednesdays. You're trading crude oil. What was it last week? No, the week before that, we had that Thursday session, right? We always love when the news is pushed back to Thursday. We're back to our normally schedule here, right, at 10:30 on Wednesdays. That means anything after 10 a.m., you've got to be pretty suspicious of tomorrow morning if you're trading on oil. What happens is the big players in the market, they know to expect some incredible volatility around that weekly inventory report, and so that causes those bigger lot traders to scale away, right, to start to streamline their positions. So not a lot is going on after 10 o'clock, and then of course about 5-10 minutes before 10 o'clock, things start getting really whippy and really unpredictable. Moral of the story is, grab those support and resistance levels and use those tomorrow. I'm going to grab them in a second for you guys as well on the next chart. And also early in, early out, anything after 10 a.m. Eastern time. My official cutoff on Wednesday mornings ahead of the inventory report is 10:15 Eastern time. But I'm always watching the price action. I'm always watching because you got to have a really good reason to be getting into a trade after 10 a.m. Eastern time tomorrow morning. Don't forget, I've covered a lot here today, this evening on this newsletter so far. We're going to do this all together tomorrow morning in my trade room. Come out and join me as an advanced member, and I'll see you guys at 8 a.m. Eastern time. We'll get a lot to cover here tonight, and the first pitch on game one of the World Series is just a few hours away. So let's get at it. We'll go crude oil, S&P, Nasdaq. Why don't we do some gold, and we'll wrap up on some euro tonight. First of all, with crude oil. Crude is bullish with a spike in range pattern ahead of tomorrow's weekly inventory report, which tells me to look for buying opportunities using seller failures below the range low, preferably down in the battle zone tomorrow morning. If price pushes higher, I'm going to try to avoid buying into that measured move and avoid buying into that channel high resistance. But I will keep an eye on the personality, because if today's massive draw on the API report at 4:30 Eastern time this afternoon, if that was any clue, this could be a very strong bull session tomorrow, and I will expect to be trading a spike in channel on Wednesday morning. One thing we can't forget is that tomorrow is inventory day, which means anything can happen. So it's best to get to those trades early. Keep an open mind, and remember, my official cutoff on Wednesdays for oil is 10:15 Eastern time. That's 15 minutes ahead of that 10:30 report. So wait for the crazy train to pass by at 10:30 before looking for additional trading opportunities tomorrow as we go into lunch. As we look at this chart here this evening, you can see it's relatively easy. Most important clue on the chart right now, I believe, is this spike and range. That spike and range is going to tell us where to look for the most reliable trading opportunities. I want to get down below the low of that range and look for buying opportunities using this rising support level, right? And of course, using our battle zone here for tomorrow. I also know if price goes higher right now, I never like to trade the breakout of a trading range. We saw a great example of that today in the trade room. And of course, looking for that two-legged trap low, right, to be a buyer from there. So those are the two basic scenarios I'm looking for tomorrow. And remember, it's inventory day tomorrow, which means anything can happen. So by the time we come in tomorrow morning, this could be all the way back down to the lows. It could be reversing on us. It's really tough for me ahead of the weekly inventory report because so many different types of traders are participating on Wednesday ahead of that news, right? There are a lot of traders out there that literally only trade oil on Wednesdays. And I always think to myself, why would you only trade oil on the worst session of the week? Wednesdays are always the hardest session. It's such a great market. Why would you just restrict yourself to trading on Wednesday morning? So kids, if you're out there listening right now, and if you're one of those folks who have only come around on Wednesdays, you're missing Monday, Tuesday, Thursday, Friday. This is a fantastic market. I realize it's not the white knuckle gambling around the news event that you're looking for, but remember, news is noise, and it's very difficult to find consistent, reliable trading opportunities around that big major news that we get. As you can see here, we do have a bull channel here right now, and I would expect this bull channel to act as overhead resistance. Combine the top of that bull channel with this measured move. Measured move also you can see up at resistance as well around that 68, and then sure enough, we get that prior week high up there at 52.63. So this whole area becomes an area of concern here for tomorrow. I want to be careful buying into that resistance level. The only scenario that I could really think of tomorrow is we just came out of this big draw on the API report. Remember, every Tuesday afternoon at 4:30 p.m. Eastern Time, we hear from the American Petroleum Institute. They give us our inventory number on Tuesday afternoon, and then we parlay that number into Wednesday's 10:30 inventory report from the Department of Energy. Long story short, we just got a very sharp draw, right? That means a draw on inventories. That either means a lot of demand or not as much supply, and it's probably a combination of both. Bottom line, what it means is that we may see this market react bullishly, and we may see, right, this kind of top of the channel end up being kind of a spiking channel here for tomorrow, right? So those are some scenarios I'm watching. One scenario would be down into that battle zone, preferred, that would be ideal. Second scenario would be strong move up, right? Trap low. Second scenario. Third scenario, strong move up, doesn't pull back, keeps going. Tomorrow morning we have a bull spike and channel, and I'm looking for that dip, right, to buy that dip from there. So digging a little bit closer to this, hopefully we could get a nice deep pullback here, maybe a two-legged pullback. So a great example of that today, of that on the Nasdaq. Hopefully a two-legged pullback, right, for that buying opportunity. Or maybe we see the price go down, moving average come over, trap low, failure into pullback, and pullback back up to retest the high, right? Trap low below the 16, failure above the 20. Obviously, I'm drawing this out right now. We'll see what happens tomorrow, right? And then pull back to the moving average from there. That would obviously be the ideal scenario there for the buyers. If we do go higher here, I want to see the moving average up above the top of that range, and then two-legged trap low to be a buyer, right? What's going to happen is if the market runs higher here, I want to see this moving average get up above the top of that range. I call that the fake out, breakout, pullback, right? We've talked about that a few times in the past few weeks on this nightly newsletter. You can, of course, become a client of mine, and I'll teach you all about that stuff in our trade room tomorrow morning. With that said, fake out, breakout, pullback, that is also an option as well. That is my plan if price does try to go higher. I'm also expecting, again, because it's an inventory day tomorrow, I'm expecting we might see a little bit of everything here tomorrow. Maybe we see a strong move up, and maybe instead of a pullback off that high, maybe we get a little shallow series of pullbacks. By the time tomorrow morning comes around, we may see this market really gunning higher here. If that's the case, spike in channel, spike in range, spike in wedge. I'm going to look for that trap low so it can be a buyer from there. The plan, if it price keeps getting stuck as it goes higher. Tomorrow's inventory day, it could reverse. It definitely could. What does a reversal look like? Three things: strength, pullback, and strength. Strength going lower, pullback to the moving average, and strength going lower. If we can get that strength, pullback, strength, and you know what I'm talking about, right? Big, strong move. Great example today. We saw earlier, right? Strong move up. Can't hold the pullback. What does it do? It fails right back down in, right? You'll notice right now the buyers here up towards these highs, buyers have clear control. The sellers have to take control here. Strength, pullback, strength, and then I'm looking for this trend line to start acting as resistance here tomorrow, and we'll start looking for that selling opportunity from there. It's going to be a little bit difficult to sell into that rising support. So if you're going to try to sell this sucker, you better get to it fast because you got that rising support trend line coming right in the way. And again, don't forget, those sellers are going to be hunting for a retest of that low at 51.55. Looking to buy that dip into the battle zone or looking for strength going higher here tomorrow. Again, don't forget, either mark down those inventory support and resistance levels for tomorrow or grab them off the blog at sidewaysmarkets.com. Let's keep rolling. From oil over to the S&P. S&P, beautiful example of a flag pattern. S&P is bearish with a flag pattern and trying to retest yesterday's low. But this isn't a very reliable place to sell because it's exactly where I'd be looking to buy if the trend was bullish. Now, my goal for tomorrow is to wait and see what we get from here. If price collapses down to the lows, then my plan is to look for traps to sell the low of that bull channel. If price shoots higher, then I'm looking to signs this trend is reversed, which would be strength from the move higher. And if it doesn't reverse, then I'm going to continue looking for selling opportunities using buyer failures up above the high of this short-term trading range tomorrow. Most important thing, and you see a bunch of these tonight, or not a bunch of them, but 3 of them here tonight, S&P, Nasdaq, and Euro, all have the same basic structure, and that is a flag pattern. Before I talk about a flag pattern, I want to quickly talk about the difference between a pullback and a reversal, and then that'll parlay into what a flag pattern does. Let's talk about a bull market first. Let's get a moving average on. Right? And I want you to think about this for a second. Strong move up, buyers are buying pullbacks. Now, in most bull markets, the market's not going to keep going higher forever. It'll pull back, right? It'll pull back below the moving average. Now, when I was a new trader, I thought that every time it pulled back below the moving average, it was a reversal. But what I've learned over the years is to watch closely about how the market reacts to the moving average. Right? One of the easy ways to tell the difference between a pullback and reversal is the flag pattern. And those flag patterns love to use the moving average. Moving averages are great, simple tools that anyone can use. You don't need fancy software. You don't need expensive computers for this stuff. Anybody can be successful with this if you just know how to read a chart. Well, guys, that wraps it up for tonight. Hope you learned a ton on this newsletter. Hope you're going to use it to earn a ton tomorrow. Don't forget, I'll be in my trade room tomorrow morning. We get the weekly inventory report. I'll be in the trade room tomorrow morning at 8:30 a.m. Eastern Time. Sorry, 8 a.m. Eastern Time, 8:00, 8 a.m. Eastern Time. I expect to see you there. If not, don't forget to grab your free pass. Come out and join me as a guest. Join the free trial on the homepage of the website. And please don't forget, if you have any questions on the way, I'm always here to help. Hit me up on live support. And thanks so much for tuning in here tonight. Tomorrow, I'll see you tomorrow morning. If not, we'll do it again tomorrow evening. Same time, same place. Be well out there. Be nice to each other. And may the trading gods be with you tomorrow. Adios, amigos. Bye-bye for now.